Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Friday, and we're sitting here on April 7th, 2023. Well, an interesting day today, right? Because it's Good Friday. Many of the markets were not open. Stock markets were closed around the United States, all the indices, all the major ones. When you take a look at the stock indices, they did open. They closed at 8:15 this morning, so they were open from 5 last night right until then. They closed. Then we had the currencies open. They closed just a little later than that, and the bonds and the notes. Everything else was closed. So you didn't get any trade in the energies, the grains, the meat markets, the softs, the general commodities all the way through. So nothing really going on there. Now, we did get the all-important jobs data. I don't know why they decided to release today instead of holding off for Monday, but this is what they did. You know, it's not a federal holiday. That's a big part of this. Federal offices are open. You got mail today. My son's a forest ranger. He's in the forest working away, so I know what's going on. The non-farm payroll came in at 236. Now, the expectations, Bloomberg was talking 230, Wall Street Journal and their affiliates 238,000. That's the difference. But any way you go about it, it's a strong number. And the reason it's still strong, if you look at that, you look at the 326, they went up in the February number, another 17,000, another 15,000 for that. The 477 we had in January, that's over 1 million jobs in 3 months. I don't remember periods like that. I mean, that's very powerful. Then the other part, your average hourly earnings, 4.2%. We are going to see that fall under 4. That's going to happen fairly soon, and that'll get the smile on the face of the Fed. You also are looking at the employment rate. Now, I saw some papers said it was 3.6, some 3.5. I think it's 3.5%, not 3.6. So a new low in these numbers. And that's very, very important. Does this take the Fed off pace? Absolutely not. I think this keeps them on pace for a 1/4 point cut. And yes, there's more data yet to come. There could be shakeups in banking. There could be other shoes to drop. But if the report were held today, I'm very confident you'd get a 1/4 point hike, and we would see then what the market does. Now, one other thing I want to bring to your attention here, if I could. When you first come on, if you're on YouTube and you're looking at this, you have now the ability, if you look at the word when you come to the homepage, you'll see the word join. Some of you don't want to go to our website and sign up to join. They're my morning subscriber videos. You can do it right here by hitting that. And that'll give you access to when I record my futures, typically out by about 6 o'clock in the morning, a.m. Central Time. And in the Spider ETF, probably around 9:45 a.m. Central Time, be there. And you will get notice instantly when they come up there and they're ready for you to view. That all comes out via the YouTube. So your choice, but a brand new feature that we decided to bring on for you. So let's go back, if we could, to the charts and take a look at what we've got. And here's what you've got. And by the way, before I get too far along with all this, there's going to be a webinar a week from Wednesday. A week from Thursday. I canceled the last one. And I realized, and I shouldn't have even set it up a week ago when I was doing this for the weekend versions, I forgot about, very frankly, Passover and Good Friday, and I realized so many people would be traveling. So we'll do one this week. I'll bring it up here so you can click at the top and register, as well as I'll send out the emails probably on Sunday if you're on my mailing list. So we have finally gotten, and it has taken a long time on a monthly closes, to get up and be kissing the area, you hit it in fact, of the 18-week average of closes. Now, it's on a closing basis. For the high for the week, you got to 41.71, so you've come there. This is a key resistance area. Does the market have the ability to get over it and stay over it? Is it going to kiss it and turn back down? We're going to find out very shortly. When you look at a weekly area chart of closes, different. That is monthly. This is weekly. You're up and over. So on the monthly, you've come up to the number. On the weekly, you've been over the number. And the question is, are you going to keep headed up? Are you going back to the 42.81 level, or just where are you going? As you can see, the market comes up here, fighting another battle probably at 4,200. You can see how the market finished off the week with lower low, higher high. That is not a trend. The resistance comes in at the 100-week moving average at 4205.5, and it's married to the upper Bollinger Band. So if the market goes there, that is the number that I look for the pros to step some money off the table. Some. Why only some? Because you're overbought. Now, should that be on a weekly chart, all of it, or not? Well, the dailies have an embedded reading. So they'll take part, but on a weekly, because you're not embedded, if you get up to those numbers, you're supposed to dump the whole position. If you've taken my enhanced Bollinger Band course on our website under education, you learn that. Then we get to the Dow. So now the Dow has gotten up with the action that we finished off with today. Higher high, lower low. Interesting. What about here? You're up in the NASDAQ to the spot where I realize people want to own the NASDAQ and they're going, interest rates are going to fall. This was the market that got hurt the most when the Fed went on to the program of raising the rates, and you saw how that came down. And now it's come up because tech heavy relies on interest rates not being high. It wants to see them dropping. And as they're dropping, this is what you're seeing rally. But on my work, until it embeds and you're not there, this rally into the 13,475 to 13,435 level, that is big resistance. So have we hit that yet? We have not. We've gotten as high as 14,348. So we're about 100 points away from hitting those numbers, but that's an alert to me. The Russell's the weak sister of everything. The market's in a downtrend. It's back into resistance of the 200-week average and the 18-week, and the momentum is still pointing down. In the 30-year bond, the market keeps hitting the upper Bollinger Band. It is overbought. I think the pros are taking money off the table there, and I realize the naysayers are going to say, Ira, you are so wrong. This market's going to end up where the Fed gives up, and they will pivot. Now, maybe. It is April. I think they're going to raise rates again in May. I'm all there by myself, but I can't even imagine CPI giving them any reason not to. I thought about it for a couple of days here, and I'm going, gee, if this number comes in another number that's strong, and I do think today's number was strong, I think it was a number in the jobs that even though we wobbled in the JOLTS, the ADP, the Challenger Gray number, ISM numbers, you didn't see it in this jobs report. I think that keeps the Fed going. What's happening, we're still shifting. The leisure, the hospitality, healthcare, they're all still very strong areas. Those are where the people are being hired, and they're still doing it. The good news is the people that are going in for those jobs can't demand a lot higher wages. The peak of the paying to get you to come in, they've reached the point where they don't have to go any higher. That doesn't mean we're seeing wages fall. It's just that the rate of ascent, that has slowed dramatically almost to the point where it's stalling. Stalling's not falling. 10-year notes, same thing. The resistance up here, that number, I think that you're at a point where the market will have trouble. Why do I say that? You tell me as you look at this chart how many times you get up and stay over the upper Bollinger Band. That's why. Okay, it doesn't do it. All right, could it? Of course it could. But you're a probability if you're a trader. Okay? That's what this game is all about. What is the chart likely to do? What's the probability? And there's only a 5% probability the market would stay over the upper Bollinger Band. I want the 95% probability. I'm in a downtrend in the dollar index. You know I wrote and published a very bearish report on the dollar, but you're at the lower band. Give me a rally. That's what I want to see out of the market so that you can get short. And in the euro, you're now up to an area where I teach this is where the smart money's coming out of this. They're not bearish. I think you stay long-term bullish on this. I think you're long-term bearish on the dollar. However, as a chartist, I throw away what I think. I look at the chart. You have a market that's got upward momentum into the key resistance point. You typically don't stay over the upper Bollinger Band. Away I go. That's what I would tell my traders. Canadian dollar. We have a lower low, higher high, momentum turning higher, but not a buy or a sell signal any longer. It did end the downtrend, but it didn't begin a clear uptrend. In the Japanese yen, if you get back over 2 weeks ago's highs, this area right here of 70, what is that, 78.11? I think it is. Let me just see if I can get to that. I'm pretty sure that's the number that's there. Yeah, 78.11. That would be a surprise on bullishness and probably carry it back up to the 79.20 level as I'm looking at it. We get the new Japanese bank governor, Mr. Kuroda, says goodbye. I do not expect there to be a dramatic change now, but I do expect that we're going to get a change away from the yen being a carry market. I think he's going to start building on the value of the yen over time. I want to use the key word, over time. In Bitcoin, trend is still up. The market is trying to embed. You have both numbers over 80 this week. Last week, you had both numbers over 80. You need one more week. You need 3 in a row. You're not there yet. I'll wait and see if it can do it. In the differential between Brent and WI, it's narrowed into about $4.40, right in that general area. When we look at a weekly chart of Brent, look where the market bottomed. I didn't know that anything was coming with OPEC. I mean, maybe you did. I certainly didn't. And yet, not knowing anything, and this is what I love about charts. If the market falls from here, I'm looking at support here, and certainly the first challenge of a 200-day average, I don't want to hang around if it gets under that. This is where I'm sure on this videos, I would have said, I think the pros are covering shorts. You're not embedded. You're down to the Bollinger Band. I think the easy money's out of the market. It went down to the 200 week, and all of a sudden, bang, you're getting that news of OPEC doing its cuts. Now, today, Russia announced on its website that instead of 500,000 barrels a day, they accomplished 700,000 barrels a day of cuts in March. Okay? There's some discrepancy if you look at exports, seaports, what went out, what the refiners got, but I'm telling you what their ministry is saying, and I write about it tonight in my newsletter. But you can see where the market held. I'm expecting very strong resistance to the upside between 88.85 to 90.50, that general area, the 100 in the upper Bollinger Band. In WTI, it's the same thing. And then the market comes back for the 100-day average and the Bollinger Band is tops. That's where I think the big resistance will be seen in the market. How long have I been telling you bullish, bullish, bullish on gasoline? Was it 3 weeks ago I did the special report saying, I think this market's going to go? And then I came out daily and I said, I think it's already on its way before the OPEC announcement. And now that you're up to the upper Bollinger Band, you're overbought. No, I think you got to dump part of your positions. But I do think you're going to end up here at much higher numbers. I think as the summer goes on, you're going to realize that certain grades of gasoline are going to be in big time demand. There are going to be shortages of them. Be ready. Octane is going to be the problem. Which grades do you have? I have a client that's been writing me about it, and I appreciate it. It's something I don't know as much about clearly as he does. I'm a futures trader. I don't get into what makes up this octane level, that one, and so on. But I certainly know how to read a chart. And these charts are friendly, and that's how I'm viewing it. Now, as I told you, what we're going to have here for you is I'm going to be putting out in a moment here. Let me get to the right thing for you. If you want to attend the live webinar, I'm going to hold the webinar next Thursday. I'm right in saying next Thursday, by the way. Next Thursday, it'll be at 12:30 p.m. Central Time. To attend it is very simple. You just move your cursor to the top. If you're not on my mailing list, an icon will appear. Give it a click, register. Back you will get your user ID and your password. I open 15 minutes ahead of time. This is Central Time, so 12:15 p.m. I open. In your note that you get from us by email with your user ID and password, there's an area there if you want to write questions that you want me to answer or markets you want me to cover. Just give it a click, fill it out. I'll get it. I build the charts ahead of time. There's only so many I can build. I get a lot of requests, and we fill up on these webinars. If you have questions, you can call my staff, give a click up there, and away you go. And if you're on my mailing list, that'll go out probably tomorrow or Sunday. I'll get those out in the mail. Sorry I didn't hold it this week, but it made sense. The more I thought about it, I said, gee, so many people are gone for Easter and Passover. They do traveling. Game over. I will see you all. Thanks for watching. I'm Ira Epstein.